Hi, everyone, and welcome. I'm Kathy Luker, a CPA who specializes in helping HVAC business owners take control of their finances. Today's live session is all about job costing and profitability tracking, something that can truly transform how you manage your business. My goal today is to help you better understand where your money is going and how to take back control of your profits. Whether you're doing $300,000 or $3 million in annual revenue, if you don't know your numbers at the job level, it's almost impossible to grow sustainably. Let's change that today. Job costing isn't just for accountants or big firms. It's a tool that can empower even the smallest HVAC shop to operate more like a well-oiled business machine. Feel free to ask questions in the comments, Facebook Messenger, or email them to me. I'll answer all questions in Facebook by the end of this week. So why does job costing matter? Too many HVAC companies are busy, but not profitable. They have money coming in, but it's not staying. The reason? They're flying blind. No job level data and no clear idea where the leaks are. Without job costing, it's easy to underbid, overstaff, or waste materials, excuse me, and never realize it. You might be breaking even or even losing money on jobs and not know it. Profitability tracking gives you the data you need to stop guessing and start managing. It also allows you to stop competing on price and start competing on value. Once you know your numbers, you can position yourself as a premium provider and be profitable while doing it. So let's define job costing simply. Job costing means tracking every cost associated with each job so you can compare it to the revenue that job brought in. Cost includes labor, hours worked, wages, taxes, and even benefits, materials from big ticket equipment to screws and sealant, subcontractors, any third-party help on the job, or other job-related costs like permits, equipment rental, and fuel. Think of job costing like creating a profit and loss statement for every single job. It shows what you actually earned, not what you hoped to earn. So why do most contractors skip job costing? Because they're overwhelmed in the field, they think it's only for big companies, or they don't know how to set it up. But here's the truth. You don't need perfect data, you just need consistent data. Even a basic system will uncover patterns and help you improve margins job by job. And remember, systems don't need to be fancy. A whiteboard, a spreadsheet, or a shared Google Sheet can be your first step toward clarity. Let's look at a real-world example. Say a quoted residential install is $13,000 and actual costs are $3,800 in labor, $5,100 in materials, $1,000 in subcontractor cost, and $600 in permits or miscellaneous costs. So that's a total cost of $10,500, giving a gross profit of $2,500 or 19.2%. The goal was a 40% margin or $4,800. So where did the profit go? Most likely, labor and material estimates were too low. Multiply this across dozens of jobs and you're leaving tens of thousands on the table. Tracking job costs lets you catch this early. You may discover you're underbidding or that your labor team needs more efficiency, or both. Start by tracking the following key metrics on each job. Gross margin, which is revenue minus all job-specific cost. Ideally, 40 to 50% on residential installs, and higher for repair and maintenance jobs. Estimated versus actual labor hours. Are you overstaffing or underestimating? Materials variance. Are material costs aligned with your bid? Warranty work. Is rework eating your profits? Profit by job. Compare jobs to your company's average by service type and to estimates to spot high or low performers. If you're underbidding on multiple jobs, your company average will be lower than you want, which is why you want to compare against both the average and the estimate. These metrics help you decide which jobs to do more of and which to price differently or avoid altogether. So what tools can you use? You can start with a spreadsheet. We've created one that you can customize for your own needs. Just write tool in the comments and I'll get the file to you. If you're using QuickBooks Online, enable projects or classes, or use job costing features in your field service software. Tools like Service Titan, House Call Pro, Gusto, QuickBooks Time, or ClockShark are for labor tracking. Even better, integrate your field techs into the process. Train them to tag time and materials to each job. Make job costing a shared responsibility, not just an office task. You can also use payroll cost estimates if you can't assign payroll to projects. Anything to give you a good estimate of cost by job. So here's how to set up a job costing system. You want detailed estimates, break out labor, materials, subs, and other costs. Labor tracking, use timesheets or mobile apps to record hours per job. Purchase coding, tag every material purchase to a job. And if you use subs or incur other costs, be sure to tag them to a job also. Job P&L review. Review weekly if possible, but at least monthly. Pricing adjustments. Refine estimates based on past data. It's not about getting it perfect on day one. Start simple, stay consistent, and build from there. You'll start seeing trends quickly. So you need to be on the lookout for these profitability red flags. Labor cost over 40% of revenue. High variance between estimated and actual materials. Install gross margins under 40%. Frequent callbacks or warranty claims. If you spot these, dig into the root causes. Are you underbidding? Are your techs taking longer than expected? Are suppliers increasing prices? What's driving the callbacks or warranty claims? These red flags help you ask better questions and make better decisions. So what are the best practices for job profitability? Cost every job, even small repairs. You'll find hidden trends in the smaller jobs. Build job P&L reviews into your weekly workflow. Get your techs involved. Share how their efficiency impacts profit. Use loss leader jobs as learning tools. Document lessons and apply them to future bids. When you create a culture of learning and transparency, everyone works smarter and the business becomes more profitable. So job costing gives you confidence to raise prices strategically. If install jobs consistently fall short of 40% gross margin, it's time to adjust. But this should be done after you identify the reasons. Make improvements in your organization first so you aren't raising prices based on inefficiencies. If your schedule is booked out more than 2 weeks, your demand justifies a higher rate. If cost goes up, and you know they do, your pricing should follow. So use your job data to talk confidently with customers. We've adjusted our pricing to reflect current material and labor costs while maintaining our quality and service standards. Now remember, everything we've discussed so far has been about gross margin or gross profit, as job costing covers direct costs. But what about rent, insurance, admin staff, and so forth? You have two main ways to account for overhead cost. Allocate to each job based on labor hours. So for example, $25 per tech hour, or as a percentage of revenue. This helps you see true profitability by job. Or track separately. Use job costing for direct cost only and review total overhead monthly via the P&L. Unless my software automatically allocates overhead costs to each job, I typically like to track overhead separately and review the overhead cost and percentage of revenue every month on a company and class basis. Then you can adjust your overhead percentage on bids, and you're not having to make manual adjustments for every job or project. However, if you have an FP&A solution, you can likely automate the overhead allocation. You can also allocate in Excel if you want to do that. So today's attendees get access to some free tools. Just write tools in the comments to get a job costing Excel tracker, margin benchmarks by service type, and a pricing calculator. Now, if you'd like assistance setting up a custom dashboard, feel free to email me. Also, reach out if you'd like help tailoring these to your business. My team and I can set up, train your staff, and automate the process. If you have any questions, drop them in the comments or message me directly. I love hearing from you and helping you apply this to your business. And if you're ready to clean up your financials, start tracking your profits job by job, and make your company more profitable, send me a message and you can email me at kathy@kathleenlugercpa.com. Now we're skipping next week's live event, but the Wednesday after next, which is July 9th, we're talking about SOPs to scale, standardizing your business for growth. Thanks again for joining me today. I'll see you in 2 weeks, same time, same place. Thank you.